Hello, traders. It is Sunday, February 23rd. I'm recording this around noon Central Time, so the market won't be open for another 5 or 6 hours. I don't know what the overnight session is going to do. Bad news. There are some bad signs. But you know that because you've been watching my videos for quite a while. The market is taking a series of body blows, body blows, body blows. And the knockout punch is coming. It might still take another week or two. We're going to get into our market analysis and what exactly has me so bearish. But first, as in all my videos, I want to go over my previous pick. Every single video, you can watch them for years. They start with my previous pick. Then I go through, analyze what worked, what didn't work. My picks have been phenomenal. And then I go through our systematic approach and I find a new pick, just like I'm going to do today. That's the beauty of all this, is that you're going to learn with each and every video the process that I go through to find these trades. I'm trying to educate you, so please click the like button, subscribe to the YouTube channel, make sure you turn on your notifications. I did a video this week when I had time to, and it was a great pick, as I'm going to show you in a few seconds. If you don't have your notifications on, you won't know when I post these videos, and I'm trying to make them relatively short, 15, 20 minutes. Get to the point, get the pick out there so you know what to do. Google, that was my last bearish pick. I did give you Netflix on Monday as well. So we had, typically Sunday I would do the video like today. Monday was a legal holiday. I can't recall if I did the video Sunday or Monday. Didn't matter. Market wasn't open till Tuesday. I'm going to take a look at Netflix in a second too. Context is super important with every one of these picks. I'm telling you what I want the market to do and what I want to see the stock do. Both these are critical. They both have to work in tandem with each other. So when the market's in go-go, gotta have a mode, which by the way, you wouldn't know it based on the sell-off Friday, but the market made a new all-time closing high on Wednesday. So as bearish as everything looked on Friday, realize we just came off of a new all-time high. Google, I'd mentioned to you, we want to see sustained relative weakness. When the market moves higher, we want to see Google move lower. That tells us that sellers are still there. Tuesday, this is Tuesday's price action. Market was flat all day. What did Google do? Tick, tick, tick. Lower, okay? Already showing you signs of selling pressure. Wednesday, market rallies, stock flat. That's beautiful because the stock can't rally with the market. It tells us sellers are keeping a lid on the stock. When we get a market decline, Google is ripe for the picking for a short. I'd already seen that type of price action in the previous week, previous 2 weeks. That's what told me that this was setting up for a great short. All we needed was some market selling. And here we go. Friday, the market opened pretty flat, tried the upside briefly, and then it sold off. And once that selling pressure accelerated, you can see the open on Friday was pretty much where it closed the previous day, flat open. And then the selling pressure started to accelerate. We easily took out the prior day's low. That's when the table was set for a great shorting opportunity on Google or any other stock that's been relatively weak. And you can see how Google sold off the entire day. This is a 15-minute chart. I can go into a 5-minute chart. Very steady selling pressure on what? On heavy volume. Yay! That's exactly what we want to see. So, yes, Google was a great pick. I'm going to take a look at Netflix, and we're going to use the same reasoning. Mind you, the market made a new closing all-time high on Wednesday. We wanted to see Netflix, boom, powering through, making a new all-time high. Did it? No, it didn't. So that told us that this was not going to be a good long. The stock is not showing us the relative strength we need for day trading. So we get a flat market on Tuesday. What would we like to see Netflix do? Inch, 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 inch higher all day. that would tell us that regardless of the market, buyers are still interested. They're in there snapping up shares, even in a flat market. We didn't get that. Well, what did we get? The stock sold off all day Tuesday. What does that mean? That means we're not buying it. We're not trading this dreck from the long side, okay? It's not doing what we wanted it to do. So, market rallies on Tuesday. Market closes higher than it did. Market rallies Wednesday. Closes higher than where it was on Tuesday. So what would we want to see the stock do? We would want to see it powering higher. We did not want to see this big drop in Netflix on a flat market Monday. If it just treaded water where it was the previous day, okay, it can still stay on our radar. But as soon as we get a market rally, we want the stock making a new high. And we have to wait for that information. And when we get that information, that's what we want to see happening. Once we saw this selling on Tuesday, we could check on it Wednesday to see what it did. But this was a sign that the stock was losing its relative strength. It's run out of gas. Take a look at the daily chart. And there you can see, this is when the video came out in here. That is a pullback off of the high. There is no relative strength in here. We needed to see it, boom, 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 marching higher. Then we would have had some good day trading opportunities from the long side. But speaking of the long side, at most, we've been day trading from the long side, and that has been super sparing. Since the beginning of December, I have been squarely focused on the short side, and we've been trading extremely well from the short side, even though the market has been floating higher. On Wednesday, I did a very quick video, and I showed you Home Depot. Loved that weakness, loved that gap down right there below horizontal support, below AVWAP-E, below the 100-day moving average. So let's go into the 5-minute chart. Let's take a look at Home Depot, and let's see what Home Depot did. So here you've got the price action on Tuesday. Market is flat, stock drifting lower. That's the kind of price action we want to see. Wednesday, market in go-go rally mode. This is when it made its new closing all-time high. What did the stock do? Drifting lower. This is when I came out with a short pick on Home Depot. Loved it. I did buy in this video, I bought the 392.50, 387.50, 5-point wide bearish put spread, put debit spread. I did that for a debit of 135, and I sold it for about a 15% profit. It was an okay trade, and here's why I got out of it for a profit on Thursday. I mean, it's hard to call a 15-cent overnight profit, disappointing. I did not like that closing high on the market Wednesday. I did not like this rebound Thursday, and these options were expiring on Friday, so better to play it safe. Bull markets die hard. So the market had just closed at a new all-time high and not quite getting the price action I wanted out of the market. Loved the price action I was getting out of the stock, but with 1 day left, I thought I better err on the side of safety. Close the trade down here, and then Friday. Of course, I'm still watching Home Depot. I love Home Depot on the short side right now. So when the market starts to fade, of course, alerts are going off saying, hey, Home Depot took out the prior day low. The short is setting up, and look at the price action the rest of the day on Home Depot. It got buried. So could have had a really nice trade on that 5-point wide spread. You can see the stock finished way below 387.50. So could have had myself a nice 200% winner on that one. But hey, market has been all over the place. We have not seen any great price action either way. Volume has been super, super, super light during this rally, and that is why I've been telling you, disregard this new high. Okay, buyers are not that interested. I've mentioned to you that asset managers are all in. Cash levels have not been this low in 15 years. The year 2010. That's the last time asset managers had this little amount of cash. What does that mean? It means they don't have much to deploy into the market. It means there's not a lot of firepower left to the upside. It also means that when you get your dips, there's not all this cash waiting on the sidelines to deploy. Well, then how's the market going to bounce? It might not bounce. When everybody's all in, that's when you get your biggest market pullbacks because nobody is expecting it. And the guys who think, well, on the next bounce, I'm going to start unloading some of my risk, it never bounces. So everybody's reducing risk at the same time. And that's when you get these market declines. So we're going to get into the bad signs. A lot of them are economic. They are technical as well. As I'd mentioned to you back in here, early December, this is where we were getting out of all of our bullish swing positions. I did not like what I had seen on the way up. So again, this is the foresight that you get by following price action. It's early. You're seeing this as the move unfolds. You're not waiting for a disaster to happen. You're anticipating and you're watching the price action. And then we started to see a pullback. The market's not been able to make a new all-time high. So what else do we have going on in the mix besides being technically weak? Plus, this new all-time high came on absolutely abysmal volume and horrible price action. Look at this. Okay, so we get a new high. We had a couple of little volume spikes in here, but look at this. I mean, we're doing no volume in here. Towards the close, you get a couple of little volume spikes in here too. But what did the character of the move look like? Look at this choppy, mixed, overlapping candles BS. And then it pulls back, it tests VWAP, and then it takes off. This is some choppy, chunky, funky, nasty price action. No bueno. Do you know what we would see if buyers were truly interested? Long green candle, 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 the whole way up. Kind of like this, except on the upside. This is aggressive selling. Blam, 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 blam. Market can't come up for air, tries to get to VWAP, couldn't do it. This is where I took a nice short entry in here. Made nice profits on the S&P futures because I could see the price action was telling me that this was going to manifest into some serious selling. I put that out in the chat room and I said, here's what's different between Thursday and Friday. And this comes down to your ability to read price action. So on Friday, we get this nice steady decline. Hardly any green candles in here. On what? On heavy, heavy, heavy volume. We easily took out the prior day's low. Didn't struggle at all. Blam! Took it right out. Okay, that's the first line of support. And the market acted as if it wasn't even there. Okay, that's some serious heavy selling pressure. When you don't get any green candles mixed in here, it tells you that sellers are persistent, 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 persistent. The market can't even come up for air. They're hitting everything. They're replenishing their offers. That's why you're seeing this nice, tight, orderly price action. Contrast that to what we saw on Thursday. Long red candle, little compression, long red candle, bullish hammer. Okay, this took place over the first half hour. Yeah, there was some volume in it. Okay, I'm noticing that. But then what happened? These are just a handful of long red candles. I don't respect one long red candle very much at all. What I would respect more is 5 consecutive red candles that traveled just as far, but that took 5 bars to form instead of just one big whoop red candle. Because one long red candle, 2 long red candles, that can simply be buy and sell programs in there, flushing everything out, looking for bids, seeing where there's some size, and then, as you see here, there's no follow through, and the market just grinds back. So this isn't persistent. This is just, a couple of big orders. Let's flush it out. Let's see what's down there. This, on the other hand, bam, 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 tick, 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 lower on massive volume. Very different characteristics. So once you form support, now you've got nice horizontal support here. The damage is done for the day. We're probably going to rally off of this low. That's not the case here. And so what we were looking for, after we had a nice steep, swift move down, we're looking for a bounce because we had a swift move down here. Slope, big slope, traveled a great distance, persistent selling, great. Let's let the bounce unfold. I was really hoping in here that we're going to get a long green candle through VWAP to get buyers excited, get a bunch of bullish speculators in there. And then as soon as that long green candle above VWAP finished, that's when I wanted to see a long red bearish engulfing candle back below VWAP. And I would have been all over that. I was watching for it. I was letting everybody in the chat room know this is what we want right now. Didn't get it. And then right when I saw that long red candle, I'm like, we're not going to get through VWAP. I'm going to take a position here. And I added right in here. And then we took out the low, and I had a very low bid in here that I got filled on. Was happy with the profits, especially given that the price action recently has been pretty choppy. But you can see we had follow through the entire day and massive volume. And now what does it leave on the chart? A nasty scar, okay? A long red candle. Going to get into a little economics here. I just want to finish up on what we see here technically and what we can expect for next week. What has happened previously when we get a long red candle off of a relative high, in this case a new all-time high? That's the question that you've got to be asking yourself. You need to have that curiosity, because the next step is, why don't I go back and look at a year, 2 years, 3 years worth of charts to see when did I have a similar pattern, a long red candle off of the high? And what happened the day after that, 2 days after it, 3 days after it? Was there any follow through? And if we go back, we can see long red candle. So the next day, you had the market opening into that long red candle. So a gap up Monday. So if I'm on Friday, if I'm trying to determine, should I take short swing positions over the weekend? If you're talking about S&P 500, probably not, because you could bounce Monday morning. That was a big, deep sell-off. I should have another opportunity, given that the market trend has been higher and given that bull markets die hard. I should expect that maybe I'm going to see a little bit of a bounce on Monday. I'll have plenty of time to enter short positions. The one thing that you do not want to do mentally is you don't want to come in and go, oh my God, I knew the market was going to fall apart and Friday was the first sign of it. Now I'm going to get all my bearish positions on because we're going straight to hell in a handbasket. It's not going to happen. Okay, we've already seen that the market has been extremely resilient. It's waiting for that bad news, and it's waiting for that bad news, but we need the bad news. We've got some bad news starting to surface, but we don't have that knockout punch. The market has been able to sustain plenty of blows. It's taken those body blows. It's starting to soften up. And one thing that we're going to see in some of the searches that we go through, the number of bearish candidates is coming up. It's increasing in all of our searches. So that tells us that now we've got some stocks that are starting to roll over and that actually look pretty weak. So yes, we get a little bit of a bounce. The next day we test that low, we test AVWAP-Q, and then look at this bounce. Okay, that's probably what's going to end up happening. Let's go back and take a look at another example. Here, long red candle, market tries and tries to get through into this long red candle, and it doesn't. And then it has another leg lower. So if we come in and Monday and Tuesday, market tries and tries and tries to get into that red candle, into the body of it, but we stay close to the close from Friday, we're probably going to get a leg down and test the 100-day moving average. That is what I believe is going to happen. Market's going to try and bounce Monday and Tuesday. If it can't distance itself from that 50-day moving average, if it can't retrace more than 50% of this long red candle from Friday, and that 50% point holds, awesome! I'm going to have a great bearish trade setting up, and we're going to blow through the 50-day, and perhaps even that very same day we'll test the 100-day, and I'm going to have my bearish picks ready, because if I see that pattern, and if I see those stocks demonstrating relative weakness Monday and Tuesday, I will know that these babies are set up for that market sell-off. I just have to patiently wait for it. But I will be ready, and I will be proactive. So what does that mean? That means that Monday and Tuesday, I would love to see a little bit of a market bounce in here, because I want to see those stocks that I want to short smack down. They can't rally. That tells me sellers are pecking away at it. We want to be short this stock. We want to reduce our risk exposure in this stock. Critically important, just like I showed you. That's why I spent so much time just going over Google and showing you that pattern. Doing the same thing on the long side and showing you what I needed to see in Netflix to take a long position. And it wasn't there. It didn't pan out. So I don't trade it. You don't just buy it because Pete said buy it. You would buy it because it did everything that Pete told me it needed to do to qualify as a good long. It never set up. Same thing on Home Depot. We continued to see that relative weakness. So Friday, when the market sold off, stock sold off, we had it all lined up. That's what I'm going to be doing right now. And I'm not showing you any longs. I'm only going to be showing you short positions. So what do we got coming up this week? What is going to be happening that could possibly move the market? Not much on the economic data point side. Okay, we did have some negative news last week. The one thing that kind of got swept under the carpet was the services PMI. So this is the flash PMI. It's released midway through the month, and the service sector accounts for 80% of our economic activity. It is significant. That's why I pay so much attention to ISM services. This is the services PMI. It fell below 50 for the first time in 2 years. Ooh, that was probably one of the reasons that the market sold off like it did on Friday. Consumer confidence, consumer sentiment, those numbers have been pulling back. We had a very weak retail sales number a week ago Friday, minus 0.9%. I think 0.2% was expected. I covered this all last week. Hot CPI, hot PPI. That means the Fed is going to stay in higher for longer mode. That means interest rates are going to stay up. Credit card delinquency rates are on the rise. Consumers are cutting back on their spending. We're seeing this across so many different companies right now are telling us that the consumer is soft. The consumer is pulling back. All the stimulus that we got during the COVID helicopter drops of money, that stimulus is gone. That has run its course. And now we're also starting to see that there are more planned job layoffs. Initial jobless claims still at 219,000. That's a decent number. But the last unemployment report came in at 148,000, not particularly strong. The wage component was up 0.5%, largest input cost for manufacturers. That is inflationary. Again, the Fed is getting to a point right now where it is stuck. It's stuck between seeing softer economic activity and higher inflation. That's stagflation. Other central banks around the world, they have been easing. The PBOC, the Royal Bank of India, the Australian Bank, Canadian Bank, Bank of England. I don't know if I mentioned the ECB, but they've all been reducing interest rates, cutting interest rates, even though inflation has stayed persistent, because they see economic conditions starting to deteriorate. So that's what we've got working right now, is this undertow. And the market has been able to tread water for a while, but I think that that's going to be changing soon. The other issue that's been a concern, it will be a concern throughout the course of the year, is the fact that the government has to refinance $9 trillion worth of debt. China has been selling U.S. debt. Their U.S. debt holdings are at a 15-year low. They need that money from the U.S. treasuries to solve their own problems because their economy is starting to soften dramatically. I read a report, and this was from one of the regional media outlets in China. So mind you, they rarely say anything negative, but based on that report and based on some analysts that took a look at what they were actually saying was happening in their economy, they're thinking that in the largest Chinese cities that growth could be 2 or 3 percentage points below zero. So forget that GDP 5.3% growth number that you're reading about. Lots of tells in China that things are deteriorating, and that's the largest global growth engine over the last 3 decades. Where's the growth going to come from? So those are all reasons why I've been bearish. The news coming out this week, really the only big news, we're going to see the second GDP release. So this is our second look at GDP. Came in at 2.3%, below expectations of 2.8%, so relatively soft. NVIDIA earnings, that's the next big news item, and that's going to be coming out Wednesday. So we'll see what they have to say about DeepSeek and all the AI stocks. A lot of the AI stocks have started to pull back a little bit, but a lot of those were bubblicious too. They'd run up so far that we're starting to see a little bit of profit taking in them. So let's take a look at what we've got. We're going to be looking at the bearish side only. Again, I can't say this strongly enough because some of you are going to hear me put a bearish pick out there and you're going to go, I'm going to buy puts on that Monday morning. That would be a mistake. Okay, the market just came off of an all-time high. Friday was a nasty day. So we did have some selling on heavy volume. We need to respect that. But let's see if we get that little bounce Monday and Tuesday. And we want it to be little. We don't want to retrace more than half of that long red candle. Tried to get up. Blam, blam. Sellers are still there. While the market tries to rally Monday and Tuesday, any stock that we look at today for a possible short, we want to see a lid on the stock. It tries to rally with the market, but no, sellers are still there hammering it. That's how we know that when we get a market drop and when the market can't recover some of that long red candle and it looks soft, boom, we know those are the stocks that we want to short. We'll short them, especially if they take out the prior day's low, And then if the market takes out the 50-day moving average, boom, we've got our market confirmation that the market is weak, the stock is weak. We add to that short position. Market blows through the 50-day moving average, blows through a VWAP-Q. Boom, we add to that short position on the stock on the notion that the 100-day moving average will be tested. That's how we do it. You've been sitting on the sidelines. Pete, you've been bearish since December. You know, you told us to tread cautiously. Yes, I have. What has the market done? Look at all this crap. This is absolute garbage, okay? You can't trade this from the long side or the short side on a swing basis. But at least if you have been listening to what I've been telling you, you aren't in here with a bunch of bullish swing positions getting your ass handed to you on a day like Friday. Instead of trying to mitigate losses on those positions, you have a clean slate to work with. You get the setup you're looking for, and you are firing away, nailing bearish trade after bearish trade after bearish trade on what turns out to be a bearish trend day on heavy volume. Close the books. Have a great weekend. Count your money. This is the day that you feasted on because you were waiting and you're patient. And we still are going to have to be in hit and run mode until we start to get that knockout punch from the market. And what's that going to look like? A small little retracement. Then we take out the 50-day. We test the 100-day, flounder around there for a little bit more, and then crack down again. That's when you know that the highs are in and that the market is ready to roll over and that we should see some really decent trading on the short side. That's what I'm looking for. Now, throughout all of this, I want you to pay particular attention to this day here, Thursday, because this is where my focus is going to be. Friday, everything sold off Friday. Okay, so it's really hard to find good bearish picks. And this is really important when you're doing your analysis. You want to see stocks that have been drifting lower for the last 3-4 days, and then wham, on Friday, the bottom falls out. So what you don't want to see is a stock that's been relatively strong and then a long red candle on Friday. It just sold off with the market. That's all it did, okay? That doesn't scare me out of long positions because the stock just followed the market. It's probably going to bounce right back as soon as the market bounces back. But a stock that was ignoring this market move higher, and especially when the market made a new all-time closing high, it was already showing signs of weakness. That's what I want to look for. So on a day like this, where you've got a bullish hammer, market sells off, market bounces back and closes near its high of the day, I want to see a stock that did not recover. So when I went through and I looked at my list, Kava, this is a nice short actually, but they're going to be releasing earnings. And I like this pattern. When I saw it, I'm like, oh, nuts. There's a red E, which tells me they're going to be announcing earnings on 2/25. So again, just a reminder, after the close Wednesday is NVIDIA. That is huge news. It's going to be a market driver. So we've got this company reporting the 25th, which is Tuesday after the close. So I wouldn't touch it, but here's what I like about it so that you know what the pattern should be. When it goes in a trend, it trends very nicely in a nice, tight, orderly fashion. When it sells off, nice, tight, orderly fashion. When it bounces, nice, tight, orderly fashion. So now we have a lower high double top, okay, on a stock that's actually run up pretty well. On this sell-off here, we blew through the 100-day moving average. We blew through the 200-day moving average. I love this pattern, but we do not trade over earnings. So just because the stock was weak before the earnings announcement doesn't mean that the stock isn't going to rally after the number. If it had already reported earnings back in here, great, this would be your pick of the week. No doubt about it. But because it's got earnings, no, forget it. It's not, but that's the pattern that you need to look for. So Tesla is a short that I gave you about a week and a half ago. I really like Tesla. Love this short. And here's why I like it. You can see it makes its high, and now it's been in a steady decline with relative weakness. What did the stock do when the market was making a new high? Okay, market, boom, 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 making a new all-time high on Wednesday. Look at this little puppy dog. It can't get off the deck. So it breaks below the 100-day moving average, and then it has a little short covering bounce. Cannot get above AVWAP-E. Sellers are still in there pounding it. What did it do on Friday? Hello, right back below the 100-day moving average. What was the price action like on Friday? Pretty bearish to me. What was the volume like? Pretty heavy. All right, Tesla is still a great short. Home Depot is still a great short. Google is still a good short. But in the interest of giving you different picks, doesn't mean you can't trade those. By all means, once you are on a stock and you can see that selling pressure, stick with it. You don't have to trade different stocks just for the sake of trading different stocks. I'm going to try and vary things up and give you a little bit different look so you've got some other stocks to look at. When I go through the list, and I noticed this on Thursday, big sell-off in financials. And when I'm telling you that there is a bad sign, that's a bad sign. When banks sell off hard, that is a bad sign for the market. It tells us that there are some pretty big concerns. Banks are the oil. Credit is the oil that lubricates economic activity. And if banks are starting to hurt, and if banks are starting to constrict lending, and if banks are getting hit with more and more credit card delinquencies and bad loan write-downs, that's not good for the economy, okay? That is a bad sign. And so what I noticed on Thursday was that bank stocks got annihilated. I mean, they sold off hard. And you can see that sell-off right there. Let me zoom in on it. You can see JP Morgan Chase. Look at the volume. Where did that come from? There really wasn't a lot of news on that particular day to justify this big sell-off in bank stocks. What did the market do on Thursday? We know it had that initial decline, and then look at that nice rally in the afternoon. Really nice rally. What did JPM do? Stayed on its low of the day. Sell, 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 sell. So these are large asset managers saying, hey, we need to reduce our risk in bank stocks, okay? I don't like what I see coming on the consumer side, the bank loan side, interest rate side. This is what they do. So that you can see the drop here. The stock hung in there pretty well because financial stocks don't move quickly, okay? They're trading at reasonable PE, somewhere in the 15 forward PE ratio. So they're not typically high-flying stocks. And then eventually, through the course of the day, they cratered. These are also the type of stocks that are going to bounce pretty well with the market. So given I think the market's going to be bouncing a little bit on Monday and Tuesday, what do I want to see JPM do? Is it the weakest of bank stocks? Could there be some other bank stocks that I would like better than JPM? We'll see. I would like to see JPM struggle to get through that closing price from Thursday, which is pretty much at AVWAP-E. So you get the rally Monday and Tuesday. I'm expecting bank stocks to participate, but I want to see that continued relative weakness. I'm waiting for the second market shoe to drop. I am not guessing when it's going to happen. I'm waiting and watching for those signs. And when it happens, I want to make sure that JPM has preserved its relative weakness and that it is not able to get above AVWAP-E. If I have all of those components, the tumblers are going to open the door. They're all lined up, and I'll have my trading opportunity for a really good short position on JPM. And I'm expecting that when we get that next wave lower, that we take out the 50-day moving average with ease on the S&P 500. I'm expecting to test the 100-day moving average. I am looking for a bearish trend day, which means that I take a position, I add on confirmation, and at the 100-day moving average, I will take my gains. Because I still don't feel that the news is going to be so dire that everything is going to just instantly fall apart. No, it's not how this is going to work. It's going to be a series of pullbacks and a series of failed bounces and a series of pullbacks because we're still trying to gather all of that news and information, and the market is just not going to roll over and play dead right away. The ingredients are there to see some sustained selling, giving that asset managers are all in, and that should also mean that the bounces that we see in the market Monday and Tuesday are going to be wimpy. Why? Because there's no damn cash left. They're fully in. They're allocated. So wimpy bounce Monday and Tuesday. Stock can't get off the deck. AVWAP-E preserved. You're going to have a good short in JPM. Or BAC. BAC, that is a lower high double top. Okay, BAC on the 100-day moving average. Nice. Market rallies this week. What does the stock do? There's your S&P 500. Nice little rally Wednesday. Stock moving lower. 15-minute chart. Down, down, down. Remember, I said I wanted to see a stock that had already been selling off before Friday. Probably going to get this question. Some of you are going to be asking, let's take a stock like 3M. It made a new high on Wednesday. It kind of held its own on Thursday when the market didn't do much of anything. And then Friday, you see this long red candle and a breakdown below this compression. Is this a good short? It could be, but you got to have some follow through. The stock is very herky-jerky all over the place. This is a compression. No, this could have been just one bad day. When the market bounces, the stock could very easily bounce. I needed to see that sustained selling even before Friday. Carvana, CVNA, looks really nasty. Big sell-off after earnings, big follow-through on Friday through the 200-day moving average, testing a long-term uptrend line here. Is this a good short, Pete? Should I be shorting Carvana? Probably not. I mean, if you were going to, you'd want to see it struggle to get through the 100-day moving average. You wouldn't even want to see it up to the 50-day, and then it would need to preserve its relative weakness. Why do I feel so differently about this? Because the stock was at $290 and it fell down to $223. It's lost 70 points, $70 in 2 days. Oversold. Stock like this is not going to just fall out after posting great earnings, record all-time earnings, okay? Stock a little ahead of itself? Yeah. But we don't need to chase something like this. We have to be patient, patient, patient. We would rather have a stock that's gradually rolling over before the market even rolls over, and then we've got an entry point as it's close to those major horizontal support levels. So anything like this that's just absolutely falling apart, you gotta treat with kit gloves on, okay? Much more carefully, because it's already made such a substantial move on the downside. There are quite a few other stocks. I traded Amazon. I did a lotto on that Friday. I made 100% on that. That was a beauty. You know, it had been showing relative weakness. I like Amazon on the short side. You can add that one too. I'm going to focus on BAC is going to be my pick of the day, though. Pick of the week. I like that BAC. I'm also thinking that bank stocks in general are going to start to soften up. So what do I want to see? Rally Monday, Tuesday with the market. Stock barely able to recover the losses from Friday. Relative weakness, relative weakness. I get that market crackdown. I want to see that 100-day moving average on BAC violated with ease on volume. If I get that, I'm taking a short. Market continues to sell off. I'm adding. So very important that you don't just take a short and then just leave it sit, because if we get that market follow through that I suspect is coming, you need to add to the position. That's where you're going to make your money. Then you add to the position again. Well, it scares me, Pete. I haven't made much money recently, and I'm kind of in there just trying to hold my own. That's fine. When the market is sideways like this, that's where you need to be with your swing trades, but you're not making any money, you're not taking any risk, you're waiting for your setups, and then when you finally get your setup on a day trading basis and a bearish trend day, that's when you've got to be able to add, because on a day like Friday, you're going to feast, you're going to gorge yourself, and it's going to feed you for probably the next week to 2 weeks while we're still in wait and see mode. It's going to take a while for this market to roll over, but the warning signs are there. So all these stocks that I've mentioned today, watch that bounce Monday and Tuesday. We want that market bounce, and we want those stocks to have a lid on them. And if we see that, when the market takes out that 50-day moving average and AVWAP-Q and it's heading down to the 100-day moving average, you're going to have 3, 4, 5 stocks, ready-made picks for you. And then you're just watching for that relative weakness. And as soon as the market starts to do what you expected, you're all over those picks. Thanks so much for watching. Please make sure to give the video a thumbs up. I'm trying to reach as many traders as I possibly can. When you do that, you help me reach a larger audience. Thanks so much. Make sure and turn on your notifications. I'm going to try and get another short video out this week. Maybe Wednesday, maybe Thursday after NVIDIA reaction. I don't know. We'll have to see when I can fit it in. But if you have your notifications on, you're going to know for sure. Thanks. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.